What's up, everybody? I'm so excited to bring you this guest today in this Why Invest Wednesday. We have Chuck Greenberg with FaceTime Insurance. He is an insurance broker and has a vast knowledge and experience of property insurance. And this is something that was a huge hot topic a few months ago when we had that devastating fire up in Erie that took a lot of homes. And we found, maybe some were a little underinsured, and there's a lot of issues that are still ongoing up there. And this made everyone kind of stop and think about property insurance. We're going to dive in with Chuck. He's going to be a great asset to you if you have any insurance questions. He's always available, always willing to answer questions, and always straight up and honest. If you're in a good policy or he can't help you, improve your rates and decrease your exposure, which is what insurance is supposed to do, then he will tell you. So excited to bring Chuck Greenberg, FaceTime Insurance, on today. So stay tuned. Hey everybody, Jeremy Kane, eXp Realty. Welcome to Why Invest Wednesday. This is one of the most important videos I have recorded to date. This is something that is immediately useful for everybody that's a homeowner and anyone who wants to be a homeowner. So I would assume that's probably most people on the planet. Super excited to dive into this super important and tactical interview with Chuck Greenberg. While you're here, please throw me a thumbs up, smash that subscribe button. If you have any questions for myself or Chuck, please comment below. Send me a DM. You can find me at JKCO Realtor on Instagram and my Facebook page as well. Would love to reach out and make sure that everyone's fully insured, because these conversations are a lot harder after a tragedy versus before. So without further ado, let's dive in with Chuck. All right, welcome to Why Invest Wednesday. We have Chuck Greenberg here of FaceTime Insurance. Chuck's been in the property insurance business for 19 years and absolutely is a grand resource when it comes to this topic. And if you are in the Colorado area, recently we had the big fires up in Erie, and that kind of got me to thinking that I probably needed to have somebody who knows what the heck they're talking about, talk about property insurance, casualty insurance, and the like, because I sell houses. Chuck provides insurance. So Chuck, welcome to the show. How are things going today?
Things are going great. Thank you very much for having me.
Good, absolutely. And Chuck is with FaceTime Insurance. I'm not sure if I said that. We will put his contact information on this video as well as in the comments. So if something spurs a question, comment, or hit him up with whatever contact information he gives, and he'd be happy to help. I know he's helped me already a ton. So Chuck, can you give me the basics of what you need to know about homeowners insurance as a homeowner?
Sure, absolutely. So if you think of insurance as like a basket of coverage designed to meet your needs, basically homeowners insurance covers 5 things, really 6 things, I should say. One is the dwelling itself, the dwelling meaning the home or the value of the home. And that's probably the most important thing. So for insurance purposes, we want to calculate how much it's going to cost to rebuild the house. That's the value of the structure and does not include the value of the land it sits on. And so typically you want to insure based upon a square foot or dollars per square foot calculation of, the value of your home. Typically, I would never use a number less than $200 a square foot, but often I'm at $300 a square foot, $400 a square foot on up, depending on the level of finish of the home, the neighborhood, etc. But the most important thing is coverage, coverage, coverage. So as long as you solve that problem on the front end of, putting a proper value on the home, then you really don't have to worry if, God forbid, something goes wrong. The other parts of the coverage, or the other components of the basket, if you will, are other structures. So an example of another structure would be a detached garage, let's say. Typically on a homeowner policy form, they're going to automatically give you 10% of whatever your replacement cost is on the house has a value for your other structure or other structures. So that could be a detached garage, it could be a shed, it could be a pool house, any kind of outbuildings on the property, whether you have them or not. It's an automatic limit built into the policy. Next thing they have is personal property, the value of your stuff, your electronics, your furniture, your clothing, your household furnishings, etc. And that's typically calculated anywhere between 50 and 70% of the value of the structure. Again, in addition to the value of the structure. Next thing is called loss of use. In other words, if your house were to have a fire or smoke damage or something like that, and you had to live in a hotel while they renovated, loss of use, again, calculated as a percentage of your dwelling coverage, would be what would, pay you to go someplace else as well as move your stuff there. Next thing is medical payments. So imagine if I come to your house and I trip and fall on the sidewalk and I need to go to the hospital in an ambulance. Typically, medical payments will pay $5,000 per person per incident to transport me to the hospital and get me looked at in the emergency room. And then let's just say as a result of that emergency room visit, there's liability and I decide to turn around and sue you. Your policy hopefully covers you for liability. Typically, a low amount would be like $100,000 or $300,000 or $500,000. And that kind of number depend on you and what your needs are. But as a homeowner, what you want to make sure of is that if anybody were to get hurt on your property or anything that happens that you're liable for, that you have enough liability coverage built into the policy to protect you so they can't sue you and take your house as a result. So those are basically the 6 coverages. They're called coverage A, coverage B, coverage C, etc. I've got a great video. If you'd like to take a look at it, you can send me an email and I could send you a link. But basically those are the components. But getting back to replacement cost. How you calculate that, there's a lot of different methods. We as agents can do a replacement cost calculation, which is based upon the square foot, the level of finish, if there's things like your kitchen and your bathroom, whether it's designer, custom, semi-custom, builder's grade, that type of thing. But the whole point is that you want to calculate a replacement cost that you're going to be happy with. So a little earlier, you were talking about the Marshall fires. And especially in a state like Colorado, where the value of real estate has really exploded in the last couple of years, what you want to be mindful of is that if you bought your house 10 years ago, let's just say, for instance, you bought a house for $350,000, which is now worth $750,000. The question is, what is it going to cost to rebuild it? And how much are you insured for based upon what you originally insured it for as many years ago as you bought it? So most insurance policies have a thing built in called inflation guard. And what that means is that each year at renewal time, they're going to up the coverage a little bit to keep pace with rebuilding costs. But again, the question is, okay, so what if the pace of rebuilding costs increased more than 1 or 2%, from 2 years ago till now, which is...
I don't know, Chuck, has that happened?
You got to say, 1 or
2%, I'm good. Right. I'll cover that myself.
Well, right, exactly. Really, I think more realistically, you'd want to up it by 5-10% a year, but that's only if you bought it recently. So the point is that if you've owned a house for a number of years, that you might really want to revisit replacement costs and make sure you're covered. So there's some good news. And the good news is that most homeowners insurance policies include something called extended replacement cost. So imagine, for instance, if you were insured for $500,000 and your policy included 25% extended replacement cost. What that means is that in the event of a total loss, which costs more than $500,000, the insurance company would actually pay you up to $625,000 as a total loss, amount. You could actually go higher. I've got 2 companies that do, one does 50% extended replacement cost, another company that does 100% extended replacement cost. And that really is the great equalizer, when it comes to, oh my God, do I need to worry about how much my house is insured for? But if you haven't ever had a conversation about it, and you've been with the same insurance company for years and years, my hunch is that it's worth a conversation with your insurance agent.
Yeah, absolutely. Because that's one of the things we kind of put on the back burner. In most cases, it's paid through an escrow account. You have very little communication with your insurance agent, your insurance broker, whatever, until what? Until a loss happens, right?
And, a lot of times when you're buying a house for the first time, you might not even know anything about insurance. So you might just get put together with someone that really never explained it to you or told you the things that you want to be aware of.
Right. And the personability thing is huge with me. I was that college kid that had Geico auto insurance, and, now they've kind of extended into this arena. But if you're just doing the easy thing and going to click through a few things and being your own insurance agent, I would definitely caution you against that and talk to a real human that can actually talk about what's going on. Now, one thing you mentioned that kind of spurred something with me is, where do you guys get the square footage from? And is there a difference between total square footage and finished square footage?
Absolutely. Okay. Where I, as an agent, get my information from, typically the first thing I do when somebody calls me about home insurance is just go to Google and just try and, put eyes on the house there. Whether the house is, that in the photo 5 years old or a recent photo, doesn't really matter. But the main thing that I try to get from that is my best guess of square footage.
Okay.
A lot of times when we rate policies with an insurance company, they use outside databases to kind of populate that information for us so we can get a good number. But in answer to your question, a price per square foot of unfinished space is different than a price per square foot of finished space. Then the most important thing is that you want to be made whole again if, God forbid, your house burns down. So usually the first place we start is, okay, how much are you borrowing? Because all the bank is really concerned with is that their interest in your home is covered, even if that number isn't enough to rebuild the house properly. And that's why extended replacement cost is so important, because, for a few extra dollars, you can purchase an extra 25 or 50%, or in certain cases, 100% of your coverage. So this way we can, just go to sleep at night and not have to worry about what if we're wrong. But the other thing is, the insurance company, after the policy is issued, is usually going to send out an inspector to verify the square footage, as well as, whether or not there's other issues with the house. And those issues typically are things like the condition of the roof and the gutters, the condition of the sidewalks and the driveways. Are there cracks there that could present a trip and fall hazard? Things of that nature.
Yep, absolutely. And so that comes up to a lot of times in our hot market right now, we are focused on, just getting into the house. We're waiving inspection rights and things like that. Well, it could happen where the roof is terrible, or maybe you even got an inspection. They said the roof's bad. You need a new roof within a couple of years. Well, If the insurance company comes out, that's going to be your cost. Sure. Right? They're not going to insure a roof that's completely obliterated by hail damage and that kind of stuff. And where I was kind of going with that square footage question, which was, answered perfectly, was if you're on the computer, right, they're taking that straight from the public record. And I will tell you, especially where Chuck lives in Arvada, almost every house in Arvada has a basement that's been unpermitted, and therefore it's not on the public record. And therefore that computer is just insuring the finished square foot of 900. And maybe you have a grand basement with a, master, suite down there or whatever a lot of those ranches have. That's not insured, because they're not doing the Zillow search. They're not going to the website to see what it actually looks like and what the pictures actually look like. So really make sure that you're paying attention to your policy up front originally, because you can still insure, you can say, hey, it's all finished. It's just a conversation that they need to, obviously change the data, from the public record, because I would say that 75% completely made up statistic on the spot of basements in Colorado are unpermitted and don't show up as finished square footage on the public record.
Right. And the point is that you want to make sure that you're made whole again in the like and fashion that you were living. And so the best thing to do is to just let your agent know exactly what's going on. So this way he can best advise you.
Absolutely. And Chuck, how often should we audit our policies? I have a few houses, obviously you have that built in 25, 50, 100%
right.
Option, but how often I don't want people to blow you up every time they buy a, new flat screen TV from Costco, but how often should you audit your entire situation?
In terms of the replacement costs of the house, I would say if you're making home improvements, that when that's done, you have to have a realistic assessment of how much more in rebuilding costs that will add to the house. And then you want to look at what you're presently insured for and make a decision as to whether or not you might want to increase that coverage a little bit. And in order for us to do that, all we have to do as agents is to, go on the web to an application which allows us to recalculate that replacement cost, according to certain protocols, and this way they can put the best number on it. But if you do have extended replacement costs on your house, the chances are that if you're, renovating a bathroom, renovating a kitchen, that you might not have to increase it. But then again, if you haven't done it in a number of years or you can't remember the last time you've done it, it's time to do it again. You may not like what the result of that is, which may mean that you may need to increase your coverage. But if your house burnt down, you'll be happy you did.
Right. Absolutely. And that kind of answered my next question, just as far as home improvements. Like if it's a next level, like for instance, we took out walls and we have a $90,000 kitchen in our house.
Yeah. Okay.
And that's probably a time where we took it from builder grade to that. That's probably a good time to reach out.
Absolutely.
We're going to fix our powder room and our laundry room. The cost is, whatever, we'll see what it comes out to be. But that's something that's, probably comes out in the wash with the inflation guards and the extended coverage stuff. So,
well, I think when it comes to improvements, you got to understand that. Let's just say, for instance, you buy a house and the kitchen is 30 years old. Okay. What's important is that if something happens to that kitchen, that you have enough in today's dollars to replace it. And so the best question you can ask is, all right, well, what's it going to cost to rebuild a kitchen in this space, and then insure for that likelihood, as opposed to saying, well, it's only worth $20,000, so therefore that's all I'm insuring it for, when you know that 20 is not going to get you there, when you're rebuilding. If you're ever going to do a home improvement that adds square footage to the house, that's something you should definitely revisit the insurance on. And also, if you're going to do home improvements that put you outside of the house, in other words, you have to vacate in order to get them done. I could do an hour about that, but the right way to do it would be to actually write a builder's risk policy on what you're doing, because a builder's risk policy is kind of like a home insurance policy for a work in progress. But the deciding factor typically is whether or not you have to vacate. And, if you do have to vacate, you should really, the proper procedure is to cancel the homeowner policy, write the builder's risk policy, and when the job is done, rewrite the homeowner's policy, which typically is going to put you at a different value than what you were at before. Because if you're adding, to the tune of, $50,000, $100,000, then obviously the replacement cost needs to be increased.
Absolutely. And then let's talk a little bit about the stuff, right? Your personal property stuff. I had somebody once tell me that you should kind of go through your home with our technology now and video your possessions and things like that. Does that help?
I think that's an excellent idea. You'd be surprised how with the cell phone camera, you can walk through your entire house in, less than 20 minutes and literally videotape everything you own. And then, don't forget to, store that off-site somewhere. So this way, if God forbid your phone gets burned up, you still have access to it. But yeah, I think that's a great idea. And also understand that not every piece of property is insured for 100% of its value. Like for instance, jewelry. Okay. If your wife has a wedding band or an engagement ring, and that gets stolen and you don't have insurance on it, typically your homeowner policy is going to cover you up to so much per incident and not more than so much for any one item. And typically those numbers are like no more than $1,000 per incident, no more than $500 for any one piece of jewelry. So if God forbid that happens, and your wife loses a ring, you're out a lot of money. The way to ensure, something of value like that is to first get an appraisal, or if you're buying it brand new, get your hands on the original receipt. But the appraisal is probably more important because it's a written narrative of what the piece of property is. And then you insure that. And depending on what insurance company you're with, they may ask you to write a separate, jewelry policy, or they may just add that piece of jewelry to the actual homeowner's policy. It really depends on, what company you're dealing with. But either way, the important thing to know is that the coverage is worldwide, meaning that, you get on a plane and go to Mexico and your wife, has a mysterious disappearance of her engagement ring in the hotel room, that you're covered for that. And typically you're covered without a deductible.
All right. Yeah. Okay, cool. That's awesome. And then one last thing that I've seen come up in our real estate world is like the sewer line coverage and the extra coverages that are available. And there's a lot of stuff, and a lot of sellers just kind of throw a home warranty at it. And I always tell people a home warranty is just like any other warranty, including the car warranty that people call you about every 3 seconds. So talk a little bit about the sewer line coverage and that kind of stuff with different insurance companies.
Sure. Well, three of the carriers that I represent here in Colorado offer equipment breakdown coverage. Sometimes it's called home systems coverage. So basically what that is coverage for things like your hot water heater, your heating system, and believe it or not, your appliances, washer and dryer, dishwasher, a refrigerator. And typically it's coverage that's pretty decent. There is a deductible on it. Usually the deductible is $500. But, the average heating system in Colorado, if it's just like a gas-fired system, is easily going to cost $5,000, if not more. And so to, get one of those, with a $500 deductible is pretty good. In addition to that, there's another coverage called underground service line coverage. And typically this is any underground line that services the house. So the most common one obviously is your sewer line, but it could be any kind of underground line, like a water line, an electrical line, geothermal, any underground line that services the house. Typically, when those things become compromised, it's because of the weight of the earth, or it's because of tree roots. And think about it like this. You buy a house, maybe not here in Colorado, but most people buy a house and they keep it for 30 years. And in 30 years, if you're lucky, nothing really major will go wrong, like a fire. But the likelihood that, an appliance is going to break in 30 years, I guess, the average life of most appliances is 10 years. So you got to figure that in 30 years, you're going to probably go through 2 or 3 heating systems, 2 or 3 hot water heater, et cetera. And, the refrigerator is going to break down, so is the stove. The cost of the coverage, believe it or not, when we attach it to your homeowner's policy, is cheap. I want to say less than $100 a year for both the equipment breakdown and the service line coverage. And like I said, with a $500 deductible, it's kind of like a can't lose proposition. It kind of gives you everything that a home warranty gives you, but you actually get paid when things happen. I mean, my wife's a realtor, and one of her first dealings with a home warranty was to have them come over 3 times. And then on the 3rd time, they said, "Oh, you're not covered." Which, okay, maybe that was the truth, but tell me on the first time rather than come over 3 times and give me the hope that something's going to happen for like what, $1,000,
Yeah, while you're freezing in the middle of December.
Right. Versus spending $80 as part of your homeowner's insurance, and this way you've got control over it.
Yeah, and I've talked to some people about this, and they're like, "Yeah, but then you have to file a claim."
Right.
Is that like a major hit against them as a human?
Well, it depends what the claim is, but just understand that a lot of insurance companies offer equipment breakdown and service line coverage as an added extra for which you pay an extra premium. And so when you make a claim for something like that, it's kind of different than when you have a fire or smoke damage or when a tree falls on the roof. But, all those things are covered. Making claims, it's entirely up to you as the homeowner, but, this is why policies have a deductible. And so the decision people usually make is, well, what is the cost of this repair in relation to my deductible? I always tell people it's probably not a good idea to make claims every year. A lot of insurance companies, once you've had 2 claims, may raise your rate or they may cancel you. But typically, if you're going to have 1 claim, make that claim. I mean, that's what you have insurance for. And you shouldn't be afraid of making claims. But when it comes to something like equipment breakdown, or think about like on your car where you can purchase glass coverage if you want. You don't have to have it, but for the extra premium, if you pay the premium and your window gets broken, they replace the windshield and they do it, with no deductible. So it's entirely up to you as the homeowner, but I wouldn't be afraid to make claims. I wouldn't want to make a number of claims.
Yep. Okay. Perfect. Well, thanks, Chuck. Where can people find you if they have any questions for you?
Well, we've got a website called facetimeinsurance.com, and you can actually go to facetimeinsurance.com and click a button that says speak to an agent, and that will connect you to me by FaceTime. Okay.
Perfect. That's a creative name. I'm glad you got the patent on it. But
I did. facetimeinsurance.com and facetimeinsurance.net.
All right. Awesome. Thanks so much for your time today.
Thank you again for having me. I appreciate it.
So much knowledge and stuff that, obviously I've seen on the outside what it kind of looks like. But when you have a resource like Chuck, it's absolutely worth your time to reach out. No matter who you have your policy with, he can look at it and he's going to tell you the truth if it's, time to make a switch or, go from there. So I appreciate you so much, Chuck.
Happy to help. Anyway.
All right.
Thanks so much.